What is going on, everybody? And in this video, we are giving a state of the market and stock picks for June 28th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market that we do have. So let's go ahead and get right into state of the markets. A lot of the stuff I reiterated in the weekly updates. A lot of it moving forward is going to be important because there is a lot of black swan events. They are being telegraphed. So even they are, I wouldn't really say black swan, because we knew there's a strong possibility that could cause the market to get into a panic. So we have to be aware of this. The fact that essentially Powell is essentially taken, he hasn't taken anything off the table. And he's made that clear on the last 75-point basis move. We have to understand that a lot of the data that's coming out is actually really good. We're starting to get some really good data on the housing sector. Understand that people are thinking it's going to be another 2008. The market is still very strong in that sector. We're getting a lot of data this week. Last week, we got a lot of digestion of Powell and his approach to why he took a 75-point basis move. Some people even hinting at the fact that we could have reached one of the biggest rate raises this year, and that we will kind of dial back on the next meeting. Where I myself, I think it just more so with getting stronger data, I think, in my opinion, it could be setting up Powell for coming in with another 75-point or 100-point basis move. And again, I've reiterated what his approach to combating inflation is not really going to help, but it's going to deter employment. It's going to deter companies from starting any kind of new side projects, cuts, job cuts, layoffs, recession. Yes, that's what I'm talking about. And to be able to hit recession, you're going to need a major dial back, right? And so what you're going to need is, if rates get so high to the point that companies stop hiring or do layoffs, anything to combat inflation. So it is a very roundabout way to try to combat inflation when the root cause is being gas. And again, one person controlling that in Putin. And understand that because the gas prices, if they aren't controlled, you're going to get this beat around the bush way to bring down inflation, which in turn is going to hurt growth. You're going to stunt growth to hopefully combat inflation. And that's the way the Fed tools work. And understanding that there's no real way to combat inflation unless the U.S. was to go and essentially take oil or get more involved in the war that is currently going on. And the U.S. will not do that because we don't want to lead to a World War III or get China involved. With all that being said, the market is trying to get in earnings mode. We had a bank test that did really well, even though the cash reserves for the banks is still very extremely high, even after a 10% unemployment being really bad. We still see that the banks could survive that. Again, kind of why asset purchasing has been kind of rolling off. But also understand that a lot of people right now are cash, and a lot of the data is showing that people aren't going out and spending their money, and putting a lot of stuff on credit as well. So that's something to keep in mind. But nonetheless, things are in an interesting spot. We had this bit of a rally. Technical wise, we had a nice bounce off the 200. It was kind of a delayed bounce, but we got that bounce right up, back up to the 20 EMA daily. A lot of times this really doesn't matter. We've been breaking some of these levels and then just selling right back off. And we are coming into a trend line. I think we could get a nice rip coming up. I'm hoping that we can kind of start getting into earnings mode and potentially break out of this channel and reclaim some levels. I don't really see how high we could get. And if you want to start going off of point basis moves, I think we could potentially reach up to that 40, 58. I'm thinking about 50-point basis moves is what the market might be thinking for the next one. If we did reach a peak peak with a 75-point basis move, maybe we're good. We even dialed in a 100-point basis move down here. But the case is, I think going into earnings, we're going to get a nice rally and then roughly hold around that 50, I think is what we're going to do. It doesn't say we can't come up here and revisit the 41.54. Strong possibility. Again, any breakout really hasn't succeeded. It has really struggled and just continued to sell off. But I think this would give us enough cushion. We got a bit of a cushion off the bounce. I'm hoping to drive a little bit more cushion going into the next Fed meeting. And then if, again, the 50-point basis doesn't cover it, we come in at 75 or 100, then you're going to see us drop right back down to these levels. 75 kind of got it roughly around that 3,900. 100-point basis move is essentially around that 36 mark. And again, if my theory is correct, and that's what the numbers are being displayed, we saw watch to see if we drop to those levels, because so far it has worked very well when we are talking about a point basis move in those zones, and that the market moves either up or down, given where the current market state is and what is being essentially advertised going into those meetings. And then ultimately understand that if those meetings don't cut it, forward guidance, let's say we get a 50-point basis move, but Powell says, hey, you know what? I think on the next one, we're going to have to really lay it down and go 75, and watch the market the next day drop down to 75 and then hold there and then continue to start pushing up. So that's the way we kind of see it. And you can see it play out here. Essentially advertises every time they advertise a 50-point basis move, it corrected quickly to that 50-point. They're like, no, it's probably more like a 25-point basis, and then it bounces. Now we're saying 50. And then, like here, we talked about 75-point basis move. We came in, we essentially sold all the way off, and then said, okay, now we're going 75-point basis move. Tagged that 75-point basis move. Then they were talking about, well, not everything's on the table, so a 100-point basis move could potentially happen. Let's just go ahead and let's try to price that in around that 36. And then we had a nice bounce and starting to push up, getting some good data to push us back up. Again, any kind of positive sentiment is going to start pushing up the market. And so interesting to see where we go. Again, we got a couple more days here. We got till Thursday. Then we got a holiday weekend, but ultimately we should be starting to get in earnings mode, especially when we come back from the holiday. Might not see a lot of movement. Might get some movement up into this top range leading into the long weekend. And then come Tuesday, we could potentially start running. I believe the market is closed on Monday. I have to double check on that, but I'm pretty sure it is. And then ultimately we'll see where we land up here. Again, any breakout has essentially been very short-lived, and we end up pulling right back into the channels. So just keep that in mind. Until it actually proves us wrong, any kind of channel or any kind of wedge or anything like that is definitely not been playing out. The ascending wedges have been playing out, but descending wedges, downward channels, anything like that have not. So being said, that's kind of where we're sitting at. On the index, we got a lot of data this week that could potentially pull us down. Again, with the strong housing data, with the strong bank test, I think that's a really good catalyst to keep us pushing up, going into earnings mode. Again, I think the next potential meeting, I think, is roughly next month, but I have to double check on that one. Just to make sure, because if that's the case, it would make sense. We would essentially come around this 50-point basis move, then kind of hover around there until we figure out what's going on, and then potentially start selling off again to correct whatever is actually given to us. So let's take a look at Bitcoin real quick. Bitcoin still struggling a lot here, roughly around the 20. Again, crypto in my mind, again, it's not going anywhere. We've been trying to find a new base. There's been a lot of negative about a lot of different things, but right now the market is just trying to find itself, and the Fed is guiding that. So until the Fed start to dial back, I think this is going to play this chop and drop, potentially start rallying. If the market really starts to rally, we'll really have to watch Bitcoin and see if it also follows along with that. So I'm really watching that. Take a gander here at wheat. The fact that wheat is actually kind of dialing back and chilling out is a good sign as far as inflation goes. Now, if this thing really starts to get some gas to the downside, you could probably almost see gas to the upside on the general index. Again, any kind of relief when it comes to inflation will help drive some of these things down. Again, you're not going to know exactly what's driving it, but if you can watch some of these industries and see what's pushing and what's selling, it kind of give you an idea of what the potential next move could be. So Tesla, as always, this one's in an interesting spot. It's got a really hard ceiling around this 769. And we're going to want to see if it breaks. It's been trying to push up. It hit the 20 EMA again. Got rejected pretty hard. As long as it can hold essentially the 729, I think we could potentially see 720 or 770. One thing also to note here is that the market does like to sell going in before earnings. So even if we do get a brief rally here, we could potentially sell off again, whatever the catalyst may be. It's funny how some catalysts just kind of line up on things. And then could potentially sell a little bit, maybe down to the 740, and then start ripping up for earnings. Could be very strong, especially if we start selling a little bit and then we get strong bank earnings. You could start seeing a rally for big tech. Tesla's been having earlier, Tesla's almost been following the banks in the next following week. So it'll be interesting to see where Tesla lands for earnings. Again, could potentially be a good one because the premium build on Teslas is quite insane going into it. And the timing for these are pretty bad because normally you only get about a week or two to really know when the earnings are before they're announced. So, but the best resource for that is to always check the site of the company as opposed to going off of something else because you're never actually given the correct date. Even on here on TOS, they will have a question mark next to the date because they're kind of assuming it could be there. It could be around 720. Not really saying. That's just a guesstimate. That's why it's a question mark. So just keep that in mind. So I want to watch Tesla, obviously, to the upside. The index, obviously, up or down on that one. AMC is an interesting one I want to watch tomorrow. I had a lot of gas today. I don't know if there's specific news driven on this thing, but I had a really nice move today. Could potentially look for another, as long as it holds this 1389, could potentially get another strong move up to 1573 there. I think you're really kind of pushing limits. You definitely want to be taking profit there. Like I've always stated, when you start coming into heavy resistance, you want to sell before you get there, and then or dial back on whatever position size you have, and then let it break and retest for re-entry, and then you just go in lighter at that point. I like to enter positions when they have a lot of consolidation like this. Then on the breakout, you start taking profits on the way up, and then have a couple of runners if it wants to continue to go. You have to definitely keep your greed in check on stuff like that. But that's why if you're trading with shares, it's good to learn about stops. Make sure you're placing stops right under major supports. But definitely want to watch this tomorrow and see if AMC can continue. The one thing you want to keep in mind, though, too, is GME has actually been selling off. And normally these things run in tandem. So the fact that they're kind of running differently could be concerning here. And then the fact that it broke the 200 EMA daily could be concerning. So just be mindful of that. So I've really watched GME. But the nice thing is these things aren't selling off a ton. If they're holding like this, that means the market has some risk on, and that they will continue to hold. As long as risk is on, these things will hold. If the market really starts to go to shit, these things will sell really fast. No one wants to hold these for long. So also just keep that in mind. I think the dynamic of the market too with the meme stocks is changing a lot. So just to keep that in mind. A lot of the traditional investing and stuff like that you've heard about, a lot of that stuff is changing because a lot more people have access to the markets and are educating themselves, and so you have to be mindful of that. And so a lot of things you may have heard before aren't quite working the same anymore. So with that being said, BA, interesting, lost some strength here. I want to see if this thing starts to really give out. Today, it had some negative news. I think there was a delay in some planes today, is what it was. It was the first out of the gate. Almost took this position to the downside, but I did not. So I want to watch this and see how this does. Again, it's my value watch. If PA starts to dive, typically the most value will start to die off. And then I kind of use that as my gauge. If value starts to die, bank starts to die, that means the general index will typically start falling. At least that's the way it's played this year. The index has normally been going off of tech, but tech has been very sensitive to any kind of rate raises. They crash pretty quickly when higher rates start getting talked about. So just be mindful of that. Let's see, what else do we got? JPM, definitely watching these banks tomorrow. It's definitely struggled. I don't like the fact we just dive down. We try to get up, try to push up, and then started coming down again. So JPM I want to watch. Could potentially start revisiting lows here, or just playing range. We might just play range going into earnings. Not a big range. So this is why I always talk about how we open up and see. Goldman Sachs had some good news after hours. Again, it's coming to the 50 EMA at the 309 mark. So really watch this. If we get rejected hard off of this starts to sell. This has been leading banks. So if Goldman Sachs struggles at all, or comes back down to revisit the 282, I think is a strong possibility considering we still got about 2 weeks before earnings. I wouldn't be surprised if these things sold off to that bottom level one last time before we try to do some kind of pre-earnings run. Or if some news is announced overnight or whatever the case is, could sink this thing back down pretty quickly. Again, since you get a couple day runners, again, something I've always talked about, you're going to get your first initial pump, and then your second day is normally the biggest. Could potentially get a nice pump here tomorrow. If we can break that 308 mark and hold above that, we could get a nice run up tomorrow on Goldman Sachs, but definitely have to keep that on watch. Snow, interesting here. We could actually be creating another bull flag here. So this one could be another good watch tomorrow, as long as it's going to hold above 150 tomorrow. When I talk about holding, I go off hourly candles because you want that hourly candle to open up above wherever that lead indicator is. Like say 150 is where I like it. Break the wedge. If it holds above if the hourly candle opens above 150, yeah, you'll get a quick retest, and then you'll normally get some kind of parabolic move. 75% retracement of this, although you've kind of already had quite a few days of runner. You're really kind of pushing this one, so you definitely want to watch this. If you have multiple day runners, typically you might get another day or two, and then this thing is going to start selling off again. That's typically how the market will run, or stock will run, unless there's a massive amount of news or something behind it that's going to really push it. Like a stock split's been kind of doing that, pushing stocks further than just 3 or 4 days and trying to go 5-6 days. But then you have to really be mindful. If you start getting anything past that third day, it's going to start selling. So you're really risking a lot more. And so my advice would be after that, if you get a 3-day runner, that 4 or 5, if you're still trying to squeeze out whatever you can, in my opinion, I think you should just let it go or play a lot lighter in those last couple of days, because eventually you're going to hit one and it's going to fall. You're going to lose in that last trade eventually. So the longer you keep playing the stock, so for me, it's always been that second day, potentially a third day have always been the best for me. Watch the first day runners and then check that second day, especially if there was a big move. That's why I kind of like AMC going into tomorrow. I just flip back to this one because it had a really parabolic move. Again, bull flag in the hourly, holding the 50. As long as it again doesn't break that 1390, it could have a massive second day and start hitting up some higher levels. Look at the daily here a little bit. It could potentially get up to those 16 mark. I did have a wedge break, so you're definitely going to get resistance at 16. So you could potentially get a $2 move tomorrow. So it could be looking at that 16 tomorrow, a strong push. And this one typically runs first thing in the morning, and then the second hourly candle starts dying off. And then that's pretty much it. So again, that's pretty much what I got. I don't got too much watching the same stuff. Index Tesla, AMC, I think are the biggest ones. Again, AMC is not for everybody. If you are new to the market, I wouldn't highly suggest it, as things move very quickly in AMC. And if you haven't bought in the consolidation part of it, this part is really going to start getting pretty wiry and pretty crazy. But again, was one of the biggest run. I think it was the biggest runner today. Again, second day is normally better than the first day, so just kind of watching that tomorrow. But if you made it too far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys.